If you look at the space industry, most people only see two names, SpaceX and everyone else. But if you have been paying attention to the financial data from late 2025, you know that narrative is dead. There is a new titan emerging, not just as a launch provider, but as a vertically integrated space infrastructure company. We are talking about Rocket Lab, ticker symbol RKLB. Today, we are going to perform a forensic audit of their journey from a small satellite launcher in 2021 to a diversified aerospace giant in Q3 2025. We will analyze how they crossed the billion-dollar backlog milestone, why their space systems revenue is the hidden jewel of the company, and why the upcoming Neutron rocket is mathematically positioned to capture the constellation market. To understand the future, we have to respect the execution of the past. Looking at the 10K filings from 2021 through 2023, Rocket Lab was often dismissed as just a launch company. They were launching the Electron rocket, a technical marvel, but the market capped their valuation based on the limited size of the small sat market. But Peter Beck, the CEO, was playing a different game. He was acquiring companies solar, software, separation systems, and radios. Critics called it a distraction. The 2025 financial reports prove it was a masterstroke. Let's dive into the Q3 2025 10Q report. The numbers tell a story of massive acceleration. Revenue for the quarter hit $157.2 million, a significant jump from $111 million in the same period of 2024. But the most impressive metric is the bottom line. Net loss for the quarter was $28.6 million. Now you might say, they are still losing money. But compare that to Q3 2024 when they lost $63.4 million. They have effectively cut their losses in half, while growing revenue by over 40%. This is the definition of operating leverage. The factory is built, the R&D is stabilizing, and every new dollar of revenue is flowing more efficiently to the bottom line. The backlog is the leading indicator of future health. As of September 30th, 2025, Rocket Lab's backlog stands at nearly $1.1 billion. This is not just hoped-for revenue, these are signed contracts. 57% of this is expected to be recognized within the next 12 months. This gives investors a level of visibility that is rare in the volatile space sector. Who are these customers? It's a mix of commercial constellation, operators, and heavy-hitting government agencies like the Space Development Agency SDA. Now let's talk about the elephant in the room, Neutron. The 2025 filings give us a critical update. Management states they have made significant progress across Neutron's structures and infrastructure, specifically highlighting engine testing and initial production execution. Neutron is not a paper rocket. It is a medium-lift vehicle designed specifically for mega constellations. Unlike the Falcon 9, which was designed years ago, Neutron is optimized for 2026's market. Demands reusability, rapid turnaround, and a payload capacity of 13,000 kilograms. The market is desperate for a second reliable, medium-lift launcher to break the SpaceX monopoly, and Rocket Lab is the only credible contender nearing the finish line. We must also analyze the space systems segment. This is where the Mynaric acquisition comes into play. By integrating laser communications into their platform, Rocket Lab is now a one-stop shop. They don't just launch your satellite. They build the bus. They supply the solar panels. They provide the reaction wheels, and now they handle the data transmission. The Q3 2025 financials show that space systems revenue is becoming a massive, stable recurring revenue stream, balancing out the lumpy nature of the launch business. Let's look at the launch cadence. The data shows they launched Electron 14 times in 2024, and by September 2025, they had completed 68 total missions. This consistency is their moat. In an industry plagued by delays and failures, Rocket Lab launches like clockwork. This reliability allows them to charge a premium and capture high-value payloads from the National Reconnaissance Office, NRO, and NASA. So what is the verdict for the long-term investor? Looking at 2026 and beyond, Rocket Lab has graduated. They are no longer a speculative small cap. With over $440 million in revenue for the first 9 months of 2025 and a fortified balance sheet, they have the runway to finish Neutron without desperate dilution. The risk has shifted from survival risk to execution risk. Can they get Neutron to the pad on time? The 2025 documents suggest they are close. In conclusion, the transition from the 2021 IPO to the Q3 2025 report is a case study in strategic discipline. They ignored the hype, built the infrastructure, and diversified their revenue. Rocket Lab is not just going to the moon, they are building the railroad to get there. For the investor willing to hold through the final stages of Neutron's development, RKLB represents the most complete, de-risked play in the new space economy.